Okay, let's just dive right in. We've got a fascinating situation based on the analysis report you sent over.
It really is.
We're looking at a company, WYFI ticker is WYFI, and a deal that, well, it seems to defy market logic.
That's putting it mildly. What we have here is a company that has locked in a contract worth $865 million.
Okay, $865 million.
But the company's entire market cap, the total price to buy the whole thing right now, it's only $634 million.
That's the paradox right there. How can a deal worth 1.3 times the company's entire valuation just fly completely under the radar?
It feels impossible, right?
Yeah. So our mission for this deep dive is to really unpack that. We'll look at the deal itself, figure out why the market is supposedly ignoring it, and what this disconnect really means.
Exactly. Let's get into the anatomy of this so-called hidden deal.
Let's do it. What are the hard facts here, the specifics?
All right, so it's an $865 million contract spread out over 10 years.
10 years. So this isn't some quick one-off thing.
Not at all. This is a long-term foundational revenue stream. And the partner involved is critical.
Who are they partnered with?
A company called Ninscale Global Holdings. And the analysis is very specific here. They're described as a major high-performance AI cloud provider.
High-performance AI. So we're not talking about your standard web hosting.
No, this is the heavy-duty infrastructure that powers the future of artificial intelligence. It's a huge tell about where the demand is.
And where does this all happen? In the physical location?
It's at White Fiber's NC1 data center, which is located in Madison, North Carolina.
Okay, and the scale of this thing is what really gets me. 40 megawatts.
40 megawatts of critical IT load. I mean, to put that in perspective for you, that's an enormous amount of power, enough for, tens of thousands of homes. It signals a massive commitment from Ninscale.
A 40 megawatt commitment for a decade. It sounds perfect. So why did the market sell off? The report points to the timing of the revenue.
Yes, and that's the absolute crux of the short-term thinking. The revenue doesn't start hitting the books right away.
So what are the dates?
It's a phased rollout in 2026. The first 20 megawatts start billing on April 30th, 2026.
Okay, April 30th.
And the second 20 megawatts kick in just a month later, May 30th, 2026.
So from the date of this analysis, we're talking about a 4-month wait until the cash register starts ringing.
Exactly. But here's the real alpha, the piece of information that the market seems to be glossing over. It's the contract structure.
What's special about it?
It's a take-or-pay agreement.
Take-or-pay, break that down for us. What does that actually mean for White Fiber?
It means the revenue is guaranteed. Ninscale has to pay for that full 40 megawatts of capacity for all 10 years, whether they use it or not.
Wow. So they're just paying for the reservation, essentially.
Pretty much. It locks in that $865 million revenue stream and shifts all the usage risk away from White Fiber and onto the customer. It's financial bedrock.
Which makes the market's reaction even more confusing. This brings us right to the next section. Why is the price down? How do you sell off news this good?
Well, it really boils down to 3 key fears that spooked short-term traders.
Let's start with the one we just mentioned, the delay fear. A 4-month wait. Why does that matter so much?
To a day trader, 4 months might as well be a decade. They operate on quarterly results, on immediate catalysts.
Right. They're not looking 10 years down the road.
No. They see revenue doesn't start until Q2 2026, and they sell. They move on to the next shiny object that promises a faster return.
Impatience. I get it. Okay. The second fear seems more legitimate. The CapEx worry. The cost to build this thing out.
This is the big one. To deliver 40 megawatts, White Fiber needs a lot of cash, and they need it now to fund the construction. And investors are scared about how they're going to get that money.
What are the 2 big fears there?
First is taking on a ton of debt. The second, and this is the real stock killer in the short term, is dilution.
Dilution, meaning they sell a bunch of new shares.
Exactly. It waters down the value for existing shareholders.
But hold on a second. If you have a guaranteed 10-year, $800 million plus contract from a major AI player, shouldn't banks be lining up around the block to lend you money for that? It seems like incredibly low-risk debt.
You've hit on the exact disconnect between fearful money and smart money. You're right. That take-or-pay structure makes this project extremely bankable.
So it's just fear of the unknown.
It is. Until the company formally announces how they're financing it, the market defaults to the worst-case scenario, which is dilution. So you get this preemptive sell-off.
Okay, that makes sense. And the final piece of the puzzle here was an analyst's move. B. Riley adjusted their price target.
They did. They lowered the target from $44 down to $40.
Which to an algorithm just reads downgrade.
Instantly. The algorithm sees downgrade, it sells, it doesn't read the context.
And what is the context?
The context is that a $40 price target is still 140% higher than the stock's current price of around $16.50.
So the analyst is basically saying, hey, this is still incredibly cheap, just slightly less incredibly cheap than we thought last week.
Precisely. The market heard the headline, not the substance.
This is the perfect lead-in to the valuation disconnect. This is where it gets really stark. Let's do the numbers. This is the mic drop moment from the analysis.
Let's lay it out. The current market cap, the price for the whole company today.
$634 million.
And the value of this single new contract.
$865 million.
The contract is worth more than the entire company.
By a factor of 1.3 times. So the implication here is, what are you getting for free if you buy the company at today's price?
Well, you're theoretically getting everything else. All their other data centers, all the revenue they're already generating, all their intellectual property, the management team, the potential for future deals.
All of that is valued at less than zero.
That's what the math says. The market has placed a negative value on the entire existing profitable business just because of these short-term fears about a new project.
It's a massive divergence between a temporary fear and a long-term locked-in fundamental value.
And that's where opportunity comes from for anyone with a longer time horizon than, a few weeks.
So if the fundamentals are that solid, the next logical question is the selling over? Let's look at the technicals and what could happen next.
The chart tells a pretty clear story. When the deal was announced on December 19th, the stock gapped up immediately to around $18.30.
But then those fears you talked about kicked in.
Yep. The impatience, the CapEx worry, it all just caused the stock to bleed back down, basically to fill the gap from that good news.
And where has it landed? The analysis identifies a key support zone.
It does. It's hovering right around $16.30 to $16.50. And that range is significant because it was the big breakout level back in early November.
So traders see that as a floor, a line in the sand.
Strong line of support, yeah. If it holds, it's a technical signal that the panic selling might be exhausting itself.
Are there any other indicators that suggest the selling is losing steam?
There are. The RSI, the Relative Strength Index, on the hourly chart is getting close to what they call oversold territory.
Which is a classic sign that a bounce could be coming.
It's a suggestion that the emotional selling has run its course right as the price hits a major historical support level. It's a powerful combination.
Okay, so let's put ourselves in the shoes of someone who sees this opportunity. What are the near-term events, the catalysts, that could force Wall Street to wake up and reprice this stock?
The biggest one goes right back to that CapEx fear. The CEO, Sam Tabar, has hinted they'll be finalizing a credit facility in the first quarter of 2026.
A credit facility, so a bank loan.
A bank loan. And this is the trigger to watch.
Why is that specific news so powerful?
Because if they announce they've secured a loan, it means they're funding the expansion with debt, not by selling new stock.
It takes the fear of dilution completely off the table.
Instantly. The second that fear is gone, the analysis suggests the stock could, and I'm quoting here, rip higher. It removes the single biggest overhang on the stock right now.
So that Q1 financing announcement is everything. What's the other potential trigger?
Insider buying. We need to be watching the public filings to see if management is buying shares with their own money.
At these low $16 levels.
Yes. If the people who know the most about the company's prospects are stepping up and buying, it's a massive vote of confidence.
It signals they believe the stock is deeply undervalued and that they're confident they'll hit that 2026 delivery timeline.
It's the ultimate validation.
So to bring this all together for you, the listener, we've got this paradox where a company's stock is trading for less than the value of one of its contracts.
And the reason seems to be purely about short-term timing issues, a 4-month revenue delay, and fear about how they'll pay for construction.
But the underlying fundamentals, that $865 million guaranteed contract, are incredibly strong.
Exceptionally strong. So as we wrap this up, there's one more thought, a final provocative idea from the material to leave you with.
Okay.
Let's stop focusing on WYFI for a second and think about their customer, Mescale.
The AI cloud provider.
Right. What does it tell you that a major player in that space is willing to sign a 10-year take-or-pay contract? Mm-hmm. They're committing to pay for this massive 40-megawatt block of power for a decade, no matter what.
It suggests they're absolutely certain they're going to need that capacity. And then some.
Exactly. Think about what Niscale must know about the future growth of AI to be willing to make that kind of ironclad, decade-long financial commitment today.
It's the ultimate tell on the true long-term demand for AI infrastructure. They are locking in their supply now before it gets even more scarce and expensive.
That commitment is maybe the strongest signal of all. It shows the companies who can deliver that power in space, like White Fiber, are holding all the cards.
A fascinating insight. Thank you for sharing these sources. For anyone tracking this, keep an eye on that Q1 financing news. That could be the catalyst that closes this massive anomaly. We'll see you on the next deep dive.